Well, we've got Merafe swinging back to a full year profit and smack in the middle of forecasts on your trading update. We've really seen those first half numbers setting the tone for what we've seen being revealed today. Are you happy with the strides being made in getting back to profitability?
Yes, we had fantastic results. From a loss last year of 6 cents per share, we managed to turn it around significantly to 11 cents per share, and that was on the back of increased sales volumes. And despite the strength of the rand, we managed to increase the ferrochrome price as well. So superb numbers, balance sheet looks strong, and 2011 is going to look even better.
The recovery has been slow, though. I mean, looking at the operating context, you've said that restricted power supply in South Africa in particular has led to a postponement of a number of planned ferrochrome projects over the next 5 years. To what extent has this dented your growth ability?
From the Merafe Xstrata joint ventures point of view, what we do see is a 3-year hiatus when there's not going to be any new ferrochrome projects coming on stream. However, what that will lead to is a squeeze from a supply side point of view, and we know if there's a supply side squeeze, that should result in increased ferrochrome prices. However, we're looking at a number of exciting projects, not only pelletizing plants, but together with Xstrata, and we're in discussions with them. We are looking at the Line 2 expansion. That's a 360,000 ton per annum ferrochrome smelter with the associated mine, and we expect that to come on stream in 2013. And from a power supply point of view, we do not envisage any problems. We have a signed contract with Eskom, and on the back of that, Merafe is coming on stream in 2012, and this project will be coming on stream in 2013. It's only 100 megawatts as opposed to the 4,000 that Merafe is coming on. So effectively, Eskom needs another 40 projects like this in order to manage their supply.
When it comes to your capacity, I mean, we know that during the economic downturn in 2009, 80% of your capacity had been shut down. Are we looking at a ramp up to full operating capacity at this stage then?
Currently, we are running absolutely flat out, as is the rest of the world. The demand certainly is there. However, we just need to be cautious. In winter in South Africa, that's June, July, August, electricity prices double. And I would envisage us once again taking off some capacity, but purely for maintenance purposes. Thereafter, we should be back to full capacity again.
What kind of impact are you anticipating on the cost front? Because when it comes to these operational costs, it's a big challenge for any miner in South Africa. And as this capacity ramps up, where I said you had closed down 80% of your capacity at one stage, this means we are operating off a very low base, one would assume, from a cost perspective.
From a cost perspective, our costs have gone up 10% for 2010 compared to 2009. It was a fantastic achievement, bearing in mind that power prices went up 25%. You had mining inflation as well. But what is important to note is all the projects that we have put in place, Primus Technology, our Bokomoso pelletizing plant, those continue to bring our costs down. And going forward, they're all very efficient from an energy point of view, and we actually see the gap between ourselves and our competitors from a cost point of view increasing based on existing projects that have come to fruition. But we've got some exciting new projects, another pelletizing plant, a UG2 recovery plant, which will further decrease our cost and increase that gap. So we're very excited about the future.
Well, of course, the company's flagged rising production costs as part of the barrier, that could tighten supply moving forward. A shortage of quality ore reserves has been another over the recent past. Talk us through that.
As far as ore reserves are concerned, most of the ore reserves have been taken up by the major ferrochrome producers. As far as our operations are concerned, we have ore reserves that are proven in excess of 50 years, and you would have seen at today's results presentation, we've announced the expansion of 2 mines. One's the Horizon mine, 480,000 tons per annum, as well as the Waterval mine. So those mines will replace existing ore, but we're very confident that from a supply of ore point of view, we're very well placed going forward.
Of course, ferrochrome inventory has been low over the recent past, over the last couple of years. In fact, what level would you like that hitting by year end, with current stockpiles pretty much too low to fill the gap that's out there?
From an accounting point of view, you obviously want those stockpiles as low as possible because it's a drain on working capital. But if you look at it from a marketing point of view, you want as much ferrochrome available as possible. We're currently on sitting between 10 to 12 weeks. We'd be happy for that to move to between 12 and 14 weeks. And based on that, we should be able to supply into a market that is hungry for ferrochrome in 2011, and we forecast that hunger to be there for the next 3 years.
You highlighted earlier that the supply demand dynamic that's currently at play is very supportive of prices. What's your outlook on that ferrochrome price moving forward? Because already we've seen, what, a 46% rise in the average European benchmark ferrochrome price for 2010.
Ferrochrome prices are set on a quarterly basis, and the price for Q1 this year was set at $1.25 per pound, and we are forecasting ferrochrome prices to go up in 2011 on the back of increased sales. We can't give definitive numbers, that's not what we do as a company, but we're forecasting an upward trend.